Hi, welcome to the Market Alert for Thursday the 9th of April 2014. And during yesterday's session, we can see the market trading higher. This is the first bar here that we're concerned with, this big buying professional bar here. The signals before don't count because they are before the 235, which would be the first bar, and this is the 235 bar. So we see the market driving higher. They're trading through the 17,900 level, and then the market struggling with the 950 level, and then we see the market moving low following the PTIs there. So the market trades straight through. We're through the scalp, and then we see prices continuing to move lower there. So you've got the entry price down to the 17,900. The market drives straight through this and then down to the low there for a maximum of 84 points on this particular trade. Now, this price action, I've spoken about this on numerous occasions, and I'm going to reinforce. If you get a red professional selling bar that trades sharply lower like this, then comes off the lows to close within the bottom third of the price bar, then expect the next bar and the bars thereafter to move back to the upside, and that's precisely what we saw here. So even if you'd used a rolling stop of 50% above the highs, then yesterday you'd have seen on this trade, I'll just draw that in for you there, down to this level, around 46 points, 50 points on this trade. You're never going to get to the maximum. We got so close to the 17,900 level there, but failing just to take that out. Sorry, it's the 17,850. That's the 17,900 level there. And then the market went quiet, and yesterday, for some unknown reason, I forgot to talk about the news, and of course it would be a day when we had important news out. It was the FOMC minutes from last month. This is at 7 p.m. and this signal came out just on the news there. You can see prices moving lower. It's not valid. I sat and watched this but didn't trade it, because you just never know what's going to happen as the minutes are read into the market. And there you see the market going lower to begin with, and then this straight reversal coming back, and then the market moving higher, and then after that the market doing absolutely nothing. So a quiet session thereafter, which is most unusual. So in the daily charts, you can see the market put in a bit of reversal yesterday. There was nothing in the FOMC meeting minutes to actually inspire the market to move higher. It seems those days of the Fed releasing these minutes, seeing the market move up 300 points, seems to have gone. Apart from Monday, of course, when Dudley spoke, just trying to put some momentum behind the market to the upside. And of course, it was a bank holiday in Europe, so this allowed him to pontificate and move the market in the direction that he wanted to, which is back to the upside, to keep the illusion alive. But we can see that the low volume there indicates that it was purely shares and stocks being marked up, not actually new professional buying. Yesterday we saw a bit of selling in this bar as well, coming off the highs before the close, and so far this morning the market back below the 76% there. On the news front this morning, we've got MPC rate from the UK 1230. Rates will remain unchanged forever. They can't afford to put up rates, and the so-called recovery is an illusion anyway. So the rates won't be going up, because it will increase the interest rate on the national debt, which they can ill afford to pay at the moment. Well, they can't, because they're printing 45 billion a year to pay the interest on the debt anyway. So no change on interest rates there. And then at 1:30, unemployment claims, weekly ones from the US. So nothing after 1:30, so it depends what the market's going to do, or whatever else is around for it to do. So nothing really there to move it to the upside, but we'll have to wait and see. Maybe quiet, as well as there's no economic news from the US. And finally, on the implied volatility, 1256 yesterday, down from 1348, down nearly a whole percentage point there. You can see that just rolling over back towards the downside there, which is unusual. This seems to be pulling back at the moment. It seems like the market doesn't see any risk of any major correction at the moment. Right, that's it from me this morning. I will see you in tomorrow's edition of the Market Alert. Have a good day. As ever, thank you for your support and also for watching. See you in the next one.